Hi guys, welcome to another live trading video by Optionables. So today we are going to review the trades taken on 8th of July 2021, and as you can see here the time is already 8:20. So today we were held up with some work later on after the trade, so I didn't get time to record. So I'll keep this review of trade really short. So we are going to focus only on one thing, what we can learn from the trade. So I am going to show you the trade on charts and I don't have the full video recording. So what I will do, I will upload my trade book as well as my order book in the description below, and I will also post it on the Telegram group. So I'll post both order as well as trade book, so you can go and analyze it in detail later on. But for now, I will just explain the basic trade and the mindset we had while taking the trade. So in the previous video also, we have discussed about VIX being very low and the premiums also being very low. So both the call option premium and put option premium are quite low. So what is the problem when the premiums are low? The major problem is you don't have much room for the market to move. When market moves around 150-200 points, you will already start to go under loss because there is no much premium to cover the up move or the down move. So you want the market to be in a very narrow range. And today that was not the case. So today the market literally fell almost around 500 to 600 points from the high. And obviously your premiums won't be covering 500-600 points. And trust me, can you believe that today we traded without stop loss, but still we were able to end with profit? So it sounds pretty strange, but I am going to show you how exactly it happened. So the thing is, you might be asking, how is that even possible? How can you trade with a stop loss and not still go to loss? So I am going to explain how exactly that happened. We'll focus on the learning because that is the most important thing. In the last video itself, we had mentioned that we were little uncomfortable taking the trade because the premiums were so low and any market movement would trigger the stop loss, right? So what we did yesterday, we started booking the trades phase wise. As soon as we got some profits, we booked the trade. Again we re-entered, again we got some profits, we booked the trade. We did the same thing today as well. So the same thing was repeated today, and I will just explain what exactly happened. So morning I had taken the market was around 35,700. I had taken a 35,700 short straddle, and overall I had got a premium of somewhere close to 230 rupees. So it was around 110 and 120. So now if it is at 220, what will be my break evens? So my break even on the upside will be 35,930, as well as my break even on the downside will be 35,470. So what I ended up doing, right? So these are my break evens, right? So I went 400 points away, that is at 35,100 as well as 300. So I went 400 points away and purchased the hedge. Here I kept very low quantity. I just kept a quantity of 1000 only. So I didn't increase my quantity. I didn't make it 2k, 3k immediately. So I kept a quantity of 1000 only. So now you tell me what will happen if BankNifty goes to 36,000. What is my worst case scenario? My worst case scenario would be the difference between this break even and my hedge leg. So that will be around 170 points. 170 points into 1000, how much exactly is it? It is 1.7 lakh. So this will be my worst case scenario, and I was pretty okay with that. 1.7 lakh is within our risk limit. So it is well within our risk limit because it is just 0.5% of the capital. So we usually go 1 to 2% of the capital. So that's the reason we were pretty okay with it. What you have to understand here is, right, in case of having 1000, if I had 3000 or 5000 quantity, that time I would be in a problem because my max loss would be really huge and I would no longer be comfortable holding on to the same position. So next what happened? The thing is, I saw the market coming down and I just didn't want to keep on adjusting the position. So I exited the entire trade with a loss of 25k. So my M to M was negative 25k now. So I hope you understand what exactly happened. It was a pretty simple trade. We did a short straddle. I hadn't kept a stop loss because we knew what was the max loss involved, and that's the reason position sizing is extremely important. In the positional trade also, I told only go one lot for every 7.5 lakh rupee margin. That is again because of the position sizing, and it is really important for your risk management. So I just came out with a 25,000 loss. It is absolutely fine because we get to recover it. So now you might ask, Saket, why didn't you keep the stop loss? The simple reason is when the premiums are so low, let's say I keep a 40% stop loss or a 50% stop loss, my buffer limit is so less. A 50-60 point move in BankNifty is more than enough to trigger the stop loss. So that's the reason I didn't keep the stop loss today, because the premiums were so less. And then what happened? Again we came to 1 o'clock. 1 o'clock again we took the trade. So what we did at 1 o'clock, we took a short strangle, that is 35,600 as well as 35,500. So here again we took a 300 point away hedge, that is 35,200 hedge, as well as we took a 900 hedge. So I am not really sure which we took on the call side. So we had taken a hedge, and this time overall this gave me somewhere close to 90 plus 90, around 180 points. My hedge was 300 points away. So what is my max risk? My maximum risk is around 120 points, right? So why exactly 120 points? That is because this straddle itself is covering around 180 points and my hedge is 300 points away. So whatever is the difference, that is my maximum risk, 120 points. I had already booked around negative 25k, which means I was okay with another 2.5-3 lakh loss because it was still within our risk limit. 1% to 2% is our risk limit. So what I did, I went little higher quantity this time because I was properly hedged. So instead of going 1000, this time I decided to go 2000 quantity. Why? In the worst case, my loss would be 2.4 lakh. So this is in the worst case scenario. But what ended up happening, again, exactly like what happened in the beginning, as the market started coming down, I did start to adjust from 35,600 calls. I came to 35,500 calls. Then I came to 35,400 calls also. So I did couple of shifts, and after that, so because of this shifting, it helped me a lot. So after that, I decided, okay, let me just come out of all the position. So I again booked further 30,000 loss with my second trade. First trade went for a 25k loss. So overall, I was at a loss of 55k negative. So I had taken two trades. Both the trades were without stop loss. And in the second trade, I just did some adjustments of shift, right? This is all because of position sizing. I really don't even have to look at the market because the thing is, I know what is the maximum I will be losing. So the most important thing here is, if I had gone higher quantity, point number one, if the quantity was high. Point number two, if my hedges were away. So if I had far hedge, then if you go without stop loss, that might turn out to be your last trading day. So one, higher quantity, two, far hedge. So you can only go without stop loss. You can trade without stop loss as long as you have low quantity as well as close hedge. So only this time you can trade easily without placing any stop loss. If you are having high quantity and far out of money hedge, and if you trade without stop loss, it can any day turn out to be your last trading day because one single wild move is enough to wipe you out. So that's the reason when we are going huge quantity, we always place the stop loss. You might have seen on other days when we go 3,000, 4,000 quantity in BankNifty on Friday or a Monday, we always keep a stop loss without fail because of this reason only. So after this, what happened? We just came to 3 o'clock. We didn't take any trade till then. 3 o'clock, we started shorting next expiry option. So we started shorting 35,200 as well as 35,300 next expiry option. So this is 15th of July expiry. So what we started to do is, as we started to short this at 350, 360 rupees, we got a solid 10 points, I think around 13 points DK on 10,000 quantity. So we got a very nice decay towards the end. So 10k was the quantity. We got very nice 13 points decay. From negative 60k, we recovered around 1.2 lakh and we ended with positive 60k. So we recovered 1.2 lakh in this last decay. So this is a very important thing, and what we get to learn from this, first most important thing is when you're uncomfortable with holding the position, exit. There is no need to keep on adjusting the trade and try to bring it to profit. Just exit, because you are going to get one more opportunity tomorrow. The second most important thing, no, risk management is extremely important. Really doesn't matter how you do it, with either less quantity and hedges or with more quantity and stop losses. End of the day, risk management is the most important thing. So these two are the key lessons what we get to learn from today, because we took the trades in 3 phases and we were able to end in profit. If I held on to the same trade in the morning, maybe I would have gone for a bigger loss than what we had. Same thing with the afternoon trade as well. So I'm just going to show you the trade book as well as order book. So this is the broker's terminal which I have opened in front of you. You can see that we have couple of positions. I had taken some positions in Nifty also. You can see that later. So you can see here the M2M is around 60,000 rupees, and today we short quite a lot of orders. So I'll just show the completed ones only. So we had 167 total completed orders. So I will export this data to CSV and I'll save this as my order book. And I'm also going to share you the trade book. So I'll just show this to you. So this is the order book, and I will also share the trade book as well. So here is the trade book, and I'm exporting the data. And trade book, the date is 8th July. So I'm going to upload both of this into the drive and share the link in the description and also on the Telegram group. So you can find that. And you can see that the overall profit for today is around 60,000 positive. And I couldn't record the video, and that's the reason I thought of giving you a detailed explanation of what exactly happened. I hope you found this video useful and informative, and if you have, please do hit the like button, share and subscribe. Thank you so much for joining, guys. I'll see you tomorrow in the new video. Thanks a lot.